Welcome to a quick intraday update. Right now I have this chart of Nifty 50 and this is a 30-minute chart of the index. The Nifty is somehow going in the same direction as we had long forecasted, but it is extending as I said in my earlier video. So after this 5-wave decline, we got this counter trend bounce, and this decline is 5-wave, and this we got a counter trends bounce. After that, the same is happening on the downside. We got this as a wave 1 and wave 2, and again in wave 1 we are extending, so possibly I have to mark this as wave 1 and this as wave 2. So we are doing 1 2 1 2 and then possibly 3 on downside, 4 on the upside, again 3 on the downside, 4 on the upside, and then the final fifth, and the final fifth will complete the wave C. So if this is extending by 1 2 1 2, then we have 3 4 3 4 and 5, possibly 5 more legs on the downside. So we have still much downside left, and what I'm looking at is the break below the 19th September low, which is around 17,400. So it would just act as a confirmation that the trend by actual terms of technical analysis has changed. And talking about some mathematical calculations, if this is wave 1 and this is wave 2, then by Fibonacci calculations, let's suppose a 1.618 extension comes over 17,300, but a 2.618 extension comes towards 17,100. So that is the kind of target I'm looking at for the overall wave C. Okay, and if I look at this recent wave 1 and wave 2, then the target comes around 17,000 just for wave 3. So what I mean by that is this is going to be a wave 1 and this is going to be a wave 2. After that we are going to see a wave 3, say towards 17,000 level. Then again we might get a wave 4, and wave 5 again might help us slide down towards probably 16,900 or even 16,800. What I want to say is this whole counter trend up move which lasted, which went from 15,200 levels to 18,100, is now over, and an impulsive fashion move on the downside has already started. A very good observation based on moving averages could be seen on the daily chart. So this is the daily chart, and let me plot a simple EMA, a 40 EMA, and the 40 EMA comes around. So the 40 EMA is this purple line. Let me take it to red. So this is the 40 EMA, the highlighted one, and the 40 EMA right now is around 17,463. So this level is approximately the same level as the previous swing low, and a close above 463 would mean that there has been a structural change in this rally, and possibly we are heading lower. So this confirmation we have to wait till we get a close below this level. We are already trading on an intraday basis 10-15 points lower than this, but we have to wait for the daily close. Most probably if we close below that, then possibly this counter trend up move is over and we are heading towards lower levels. Now at what levels am I looking at? If I plot a Fibonacci retracement right from the bottom to the top, then mostly at a very conservative target would be around 16,639. That is a 50% retracement, and a 61% retracement comes around 16,300. But a very aggressive approach would be that if I start to consider this as a counter trend up move, then by a definition, a bookish definition would mean that the next move would take us just towards the low, which is around 15,200. So that's around 2,200 points of drop. Well, that this drop you should keep in mind looking at the overall equity exposure we are having, and you should lower it as in when markets give you opportunity. This is the chart of Nifty. If I show you the chart of Bank Nifty has already started to underperform, and the IT has started to overturn. This happens at very important junctions of market, be it the extreme top or the extreme bottoms. We have seen it happen all across the time frames be it 2008 or the COVID-19 bottoms, or even the 2021 tops. So what we have got is, after this 1 2 3 4 5 decline, we have got this counter trend move, and we have now broken below this. We have passed this low, so that would mean this is wave 1, wave A and wave B, and wave is still continuing on the downside, where there's a strong support around this 39,700 zone, which is a previous top. But looking at the global indices, the way Nifty is price action, and some of the FI contracts, so they are now net short around 67,000 contracts. So probably we might just need to wait till the whole downside occurs. According to the charts, there's still more downside left. If I take the help of Fibonacci extension, we are around the 1.618. So 1.618 extension comes around 39,521. So probably that would be a possible target on a very short term intraday basis. That is just around 270 to almost 300 points of difference on an intraday basis. Well, we are here just to judge and forecast the markets. The markets might just oblige in their own way. Okay, thank you.